Hello and welcome. My name is Augie. I'm the president of the SEAL Group, and I want to thank you for joining us today. Just a little learn and refresh for you to get you back on course with your trading. And if you're new to trading, this video will help open a lot of information that maybe you've not been given information to. A little bit about the SEAL Group. We're a small company started here in Collierville, Tennessee. Started back in 2011. We're basically a team of traders, and we work together to not only teach people, but help take traders to the next level realistically. So if you're looking for a real way to become a true trader and actually on the market, well, we thank you for joining us. Please feel free to subscribe to our YouTube channel also. You'll be able to see that. You should see an arrow pointing to a like or subscribe sign. If you don't see it, well then I'll make sure we get that fixed sooner or later. Let's get started. Of course, we always want to respect all U.S. SEC regulations. So we just want to give this quick disclaimer. The SEAL Group Investments, of course, we are not your professional financial advisors. Make sure that if you're trading and you actually are trading some actual money, there's nothing wrong with speaking to a financial professional regarding certain transactions that you may or may not be making and how what you may be responsible for when it comes to trading. Of course, we can't guarantee that you're going to make $1 million or you're going to lose it all. But we are definitely here to offer education as well as a mentorship. And that's something that we take very seriously. But we also want to make sure that you understand that we're not here it's not a get-rich-quick scheme. So in no way do we promise that you're going to make or lose money. We don't guarantee that kind of thing. I mean, come on, that's the standard. Of course, anything that you see on our site is purely for educational reasons. We're not affiliated with any of the news outlets, the companies, or any entity that will appear on this site or in this video. I just got to know that there are very inherent risks that come along with investing. Any financial professional or any person in the market who's done any kind of trading will let you know that this is going to happen. And guys, everyone needs to know that past performance is not indicative of future results. Now, first thing we're going to talk about is financial literacy. And some people are going to say, well, what does that have to do with investing? Well, your ability to continuously put money into your brokerage and give yourself the best chance of making profits starts off with how well you handle your money. And most people fail in this money aspect. They're dealing with credit. You guys know what credit is. You can get credit cards, lines of credit, automobiles, homes, student loans, all kind of stuff like that. And really, all credit is just how well you borrow and pay back money. Of course, companies charge you interest for borrowing that money, and you're basically giving them money to borrow. Now, most people say you'll need it. Realistically, you don't. The more money you're putting out in interest and in payments, the less money you truly have to invest. So something we always tell people is that if you're financially literate in all aspects or financially educated, it just doesn't deal with your ability to go out and invest and make money. It also deals with your ability to save money and keep money. So this is just an opportunity for us to kind of help people get themselves in order. And some ways that you can kind of get your credit online is, of course, just pay your bills, man. Pay them off and stop using the cards. Try to get your limits that you have right now or the balances you have under 30%. And that makes it more manageable for you to pay these things off and get rid of them or use them in a more responsible fashion. Try to stop running so many credit applications, because the more credit you apply for, the more you extend your dollar, you leverage your dollar. And it's just too hard to have money to invest if you're obligated to make payments to people. And then you want to start to challenge the accuracy of things on these reports that you have. And if you're going to do that, you need to do it by mail, by a physically typed letter or written letter. And it needs to be sent to the credit reporting agencies by U.S. certified mail. And, of course, you can also check your reports. You can do these things for free on these companies, Credit Karma and annualcreditreport.com. Just make sure you're not challenging your reports online, because when you do that, you waive the option to challenge in the future. All right, let's get to what we talked about. These are user submissions. We had a client say that they want us to help go over some common patterns that we're going to see in the trading world. So these are some of the most common. These are the ones, at least, that I were able to kind of put together and see that I study and that I utilize as far as entry and exit point patterns. So just a little bit of breakdown of what a pattern is before we go too deep into these. It's just the stock market is basically comprised of mathematical formulas that are executed by us trading, by us purchasing and selling, or the market buying and selling, and prices going up and down. So to a certain degree of certainty, we can understand exactly what these patterns are doing based on what's happening with the price points. And because these patterns happen over and over and over again, anybody who has even traded a small amount is familiar with, hey, I've seen that before. Hey, that looks familiar. So what we're looking at now is the price action, doing specific things, and those things being repeated in a constant fashion, no matter the stock type. Doesn't matter if it is doesn't matter if it's in the financial sector, if it's in the oil and gas, if it's in the energy sector. Sorry, I had a bug out there. These patterns are going to occur over time. Now, some kind of a base of context. When you see patterns like this, for example, what we're looking at right here, this blue line, is considered the support. And without going too deep into that, the support basically is a level or a number that we know through analysis. When the stock price gets here, it tends to fight to go beyond, either below or above this price. So we call these prices, we call these levels support or resistances. And that's basically just the mathematical level that the stock price will reach, where it'll either stop or it'll need a lot of force or buying and selling action to break through that level. So when the blue line is to the bottom, we know that that's a support. All right. And when the blue line is to the top, we know that that is a resistance or something that keeps the stock price from going up. It holds it down. And if the stock price manages to break this key level, we know that there's a lot of energy behind that. And that's going to force this motion or this stock price to continue in a certain direction. So let's start from the beginning. If we're looking here at a head and shoulder, this is by far to me one of the more common trading patterns we see. And we're going to see that more commonly now because we're going to be in a lot more of a bullish cycle, or we're going to be in a cycle where the stock prices are falling. So what we mean by that is we'll have a point in time where the stock price will start to rise. Of course, it'll come down, it'll retract. We'll have this explosion. So I want you to think of this as a person. We're going to do a little stick figure drawing. These are his arms. Well, you can consider these arms. But really, we're looking at this. These are his shoulders. All right? So we can erase that line. These are his shoulders. Whoops, took his head off. But this is the head and these are the shoulders. And this kind of pattern emerges usually at the end of a bullish cycle. And then we have some sharp retraction as the market starts to go downward. And once the stock has gone down, come up and then head back down. After it's broken, remember, that support level. When the market has broken that support, this is normally a great entry point, and it can be on a short term or on a long term scale. As far as long term, I'll say a couple of weeks for what we're looking at now. This is a pattern that emerges quite frequently. And what we'll notice is that we also have head and shoulders sometimes, but it'll be in the inverse. So if I could flip this, this would look completely different again. We would have it where the stock is coming down, retracting, a large fall, comes up, and now the stock continues upward. And if we had a support, a resistance that was holding us down, this would be our entry point. And again, that looks kind of similar to what we're going to talk about next, but this occurs in the market because what happens is that there's a battle between buying, which we know buying action increases the price, and selling action. And toward the end of this pattern, when the buying action has come to its peak, the head, it's reached its max, what comes next is going to be a period of downward price movement. So when you're looking at this pattern, or you notice that there's an even head, stock price retracts, a large explosion, and the stock price retracts. If we get that retraction to occur at a very similar point, the next thing we want to watch is where does this stock cap out at? If it caps out lower and almost identical to the previous, not this head obviously, but the previous shoulder, well then we know that we have an entry point for this downward side that a put or any short selling will give us a great opportunity. So, again, look at it just from a basic standpoint. This is a technical pattern that emerges as price action moves in a specific pattern. And again, guys, it does not matter what market you're looking at, what sector. These are just patterns that occur because of mathematical, occurrences that are frequent. These are going to be very frequent occurrences. And I guarantee if you go back and look at some of your charts, you're going to see very similar patterns, especially if you're using support and resistance in this proper fashion. Next, which is going to be a common occurrence in the market, which, well, again, we've seen very commonly, especially toward this bull cycle, is going to be the rectangle. And the reason why we call it the rectangle is basically the shape that this makes, or the shape or the pattern that the price is held within. Now, notice here we have our standard support and resistance, and we can call this a TSR, true support and resistance, meaning that it is a point that is going to hold at, both lines will hold as support and resistance at some point in time. And the reason why we can call these TSRs is because obviously it's a straight line. Most support and resistances that we see are going to have some kind of deviation or some kind of slope to them, because we're usually looking at price motion over time. But when we use true support and resistance, time is a factor that kind of makes the trend concrete. What do you mean by that? Well, if we take these support and resistances back months, even years, we're going to see that the price action has moved between these points, and it has been the support and the resistance multiple times over time. So it is a number that we can hold very sure to, or we can have a high degree of confidence or high level of confidence that this price level is going to be relevant in the future. So when we're using the rectangle scope, we're noticing that, and I call this sideways trading. I've told my students, I call this sideways trading, where the stock price is moving in almost in an even fashion, which is equivalent to market equilibrium. The market is even, which is very rare. It's one of the most rare occurrences that occur. Not rare occurrences, but it's incredibly rare because, buying and selling is rarely happening at an even rate. But in this case, it is, and it's moving between a support and resistance that can be leveled, and we see that this top level is being tested. If the stock continuously touches this resistance line, this top line, this line has a level of significance that is very key to us. And if we can break that level to the top side, that's the time to join in or enter the stock, because it's obviously key that the stock has enough power now. The price has enough power to shoot on and go up for quite some time. All right? So that's a key level. And if we look at the entry on a head and shoulders, which is a downside investment potential or a downside investment continuation, we see that the stock, this support, has been touched multiple times. Therefore, that support is pretty viable, or it's pretty tough. So when the stock price does break it, there's a lot of energy, a lot of force that has occurred that makes this a very smart and a very frequent play that you're going to be able to see. Now, guys, we're not going to tell you to go and you're not going to make all these trades the right way every time. But if you start to understand how these patterns are, over time you're going to erase the analysis by paralysis and feel more confident about your entry as well as your exit points, because you'll start to learn that once this has happened for a certain amount of time, it's not going to last forever. So you're going to make your money and get out. One of the more common looks that I am very familiar with and that I trade are going to be the pennants. A pennant is basically, you see this flag shape, if you're used to a baseball pennant or a flag, that's why it's called a pennant. And we're going to see that, and again, we're talking about the flags, we'll see that in the future. But a pennant is a strong signal because it is going to reveal stock consolidation, meaning that the range between the stock price is becoming smaller and more tight as time goes on. And what ends up happening with this stock consolidation is it's almost like boiling water in a pot and locking the lid on the pot, and you make the pot smaller and smaller over time. The pressure that builds up is so incredible in that smallest region of the pot that eventually we have the explosion. And if we notice multiple times, this top side has been touched, and then we have the explosion through. Notice that in the rectangle, that explosion goes up, and we take advantage of that also. Guys, you're going to see a pattern here. We're just looking at opportunities where the stock price has shown us that a support and or a resistance has been touched multiple times. And once I'll call it the explosion occurs, the entry point is there. Now, if you're wise enough or if you're lucky enough to get entry in at the early part, great job. But the reason why we don't look at these levels inside the realm of the support and resistance is that we know that there's a possibility that a retraction or reversal could occur in that zone. We are looking for that upside motion to occur for us to get the signal to entry. So that's very important. So again, a pennant is just where the consolidation occurs and the pressure for the stock price builds. You can have a pennant for the upside and the downside, and I'm going to give you a tip a little bit in the future coming up of a site that I use that kind of gives you insight as a new trader to how to look for these common patterns. Another one we're talking about here is a flag, and obviously if I stick a line there, this looks like a flag. And again, this is just where the stock price is moving in a channel. Notice here that the support and the resistance are coming to a convergence where they're coming together and tightening. Therefore, they're shortening the range of the price action. Here in a flag, we have two even moving channels that show us price direction. Obviously, it can come from the downside and break through the upside, or we can have the reversal where it comes from the upside, works within that channel, and then breaks down to the downside. And obviously, if it breaks to the downside, this will be our entry point if we're watching that. Okay? But what's important about the flag that's different from the pennant is that the pennant wedges, and this is also called a wedge. I'll show you this in the future. It wedges the price action into a tight space where the flag allows the price action to move, but in a fine and fixed channel. All right? So again, guys, you're going to have to continue to access your research, but this gives you a basic understanding of how the price action and how that price action movement occurs in relation to support and resistance. Now, some of the more advanced wedging or advanced motions that you guys may not be familiar with seeing are, for example, a symmetrical triangle, and that's very simple. We can always call this an equilateral triangle. That obviously these wedges, this wedging action is even. Here we have it where it's an acute or an obtuse movement. One side of the triangle will move at a very flat rate, while maybe the downside will move at a very sharp angle or a sharp slope. Here, the sloping or the wedging is occurring at an even interval. Now, just because the wedging is occurring at an even interval does not mean that the price action is moving at an even interval. And that's what's so tricky about a symmetrical triangle, is because it'll still occur as a wedging. Notice that the price action is becoming more short and more narrow as it moves closer toward this tight vection or this tight point where the two support and resistance lines meet. However, the price action can move in a very rapid or very wild fashion. So again, you want to make sure that you're aware of where the upside truly is, because down here you could have had some motion here, or you could have had it come off of a steep drop off. And this is going to be the more common aspect, a steep drop off of price. I don't know, maybe earnings or whatever will occur, and we'll see that the stock will kind of start to work its way back up, but be aware of the environment and the market. As well as, guys, an ascending triangle. This is very similar to what we've seen in this pennant side where there's a flat TSR. Here, it's not that flat on the bottom. It's kind of sloping, but you're going to have a TSR that's flat, and then you'll have a motioning or a moving support in this aspect. And of course, it's the same thing, guys. It's the price is being wedged into it, but this is what we call an ascending wedge. All right, and I'm going to show you a tool that'll kind of help you in the future. That way, you're not so confused on, well, how do I know if it's ascending versus pennant versus how do I know that it's not going to become symmetrical? I'll give you some information that will allow you to see that very soon. And again, guys, this is, although it's a very difficult pattern to recognize in the moment, these two are the more of the common patterns. And it's basically a head and shoulders with no head. Two shoulders, but it's called the double top, double bottom. And the reason why is obviously the price action hits either the support or the resistance 2 times before it breaks through on the other side. And what do we notice? That it came from the downside, it touched the resistance at 2 points, and then it broke back through. It is common, but to me it's difficult to trade because as a new trader, I think that it's counterintuitive to believe that if something has come from the down, that it's going to go up just to come back down in the near future. But that's what the market does. We're guaranteed that up and down motion. So some tools that I can give you guys to kind of help you that are free and that you can go out and use now are a site that I use called Finviz, Financial Visualizations. And what you can see here, guys, is we have trend line support, trend line resistance, wedge up, wedge down, triangle ascending, triangle descending, channels, double tops, multiple tops, and double bottoms, as well as head and shoulders. And so this is going to be a place where you can come as a new trader. And if I were on the website now and I highlighted the stock, it will pull up a mini 6-month to 1-year chart that would also have the support and resistance as well as the correlating pattern. And any stock that you place in these charts, guys, they will give you the majority of the support and resistance, and you can analyze if there are any charts or any patterns that are occurring. This is a great tool that's free, and it allows you to really give yourself an opportunity. Obviously, we see all this red coming off this recent market correction, or this, in my opinion, a correction, with the Dow being down 424 points, NASDAQ being down 124 points, and the SPY, which killed some of our people's positions, coming down about 55 points. So again, guys, Finviz is a website that you can use. Again, here are some free sites that I recommend you go to. Some of the ones with asterisks are also going to have some paid components to them, but it's a great opportunity for you to go and just get some information in. And if you guys have any questions, feel free to reach out to us on our Facebook, or you can reach me directly at Austin, AUSTINE, Austin E, at thesealgroup.com. We didn't have enough time to go into the butterfly and strangles trading strategies, but be looking out for another YouTube video to come out for there. We want to thank you guys for joining in with us. Obviously, everything we do is for free. I don't feel there should be any charge for people to understand how to learn the market. Now, of course, if you're eager to learn specified trading strategies or to join our trading group, you can always visit our website, thesealgroup.com, and we have some great information there for you, as well as you can look to join a specialized program, a certified program, where after the 3 or 5 week program, you're going to come out feeling like an expert and having a wise knowledge of how the market works. Again, we want to thank you for joining us today. Seal Group out.